Hey everyone, it is Julie here with TipRanks. Today we're taking a look at two semiconductor stocks that are loved by top analysts. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're talking about two chip stocks that have both recently been picking up buy ratings from the top 1% analysts on Wall Street. And no, we're actually not talking about Nvidia today. Now, I found today's stocks when I was checking out the top extras page on TipRanks and seeing the recent activity of some top 10 analysts. From the top analyst page, I was focused in on our top 10 here, and you might notice a lot of them are in the technology sector. So it wasn't a surprise that when I started to go through the profiles and their recent stock coverage, I started to see a couple names that were showing up time and time again. In the past week, several of these top 10 analysts have weighed in on these two companies. Just before we jump into these two stocks, this is your reminder to make sure you've downloaded the TipRanks mobile app so you can access all the latest investment news and stock research tools on the go. Links are in the description down below. Now let's get right into things, starting off with the first company, Marvell. They trade under the ticker MRVL and are currently priced at about $68 per share. They have seen growth of 78% in the past year, climbing 16% in the last 3 months, but you can see they've been cooling off here lately, falling over 15% in the past week. Marvell is both a designer and producer of semiconductor chips. The company specializes in the design and manufacture of chips for data infrastructure, creating the underlying tech that allows the movement, processing, storage, and security of data in a wide range of applications. Those applications include server stacks, Ethernet networks, and storage accelerators. Their product lines are aimed squarely at the heart of the AI boom, as their technology offers the processing capabilities needed in AI-heavy applications such as data centers and self-driving vehicles. Marvell has been on the decline this past week following their Q4 earnings report. Though they did report better than expected revenue, their Q1 guidance left investors wanting more. For their fourth quarter, they reported earnings per share of 46 cents, which was right in line with analyst expectations, and net revenue of $1.427 billion, which grew 1% year over year. Looking at the first quarter of fiscal 2025, their CEO said that while we are forecasting soft demand impacting consumer, carrier infrastructure, and enterprise networking in the near term, we expect revenue declines in these end markets to be behind us after the first quarter and project a recovery in the second half of the year. Along with their fourth quarter report, Marvell also announced a $3 billion addition to their stock repurchase program. And this additional authorization was the largest authorization in the company's history, bringing their total authority to about $3.3 billion. In just the last couple of weeks, 5 out of our top 10 Wall Street analysts have reiterated a buy rating on the Marvell stock. The number 3 ranked analyst from UBS reiterated their buy with an upside potential of over 36%. From Susquehanna in position number 4 here, an upside of over 37%. Rick from Oppenheimer, ranked number 7, gave the stock an upside of 16%. Matt from TD Cowen, number 8 out of our top 10 here, an upside of 29.5%. And Quinn Bolton, number 9 out of 10, with an upside of 36%. And of course, it's not just our top 10 analysts weighing in. The Marvell stock does come in as a strong buy based on 29 current analyst ratings. With 28 buys and 1 hold, the average price target comes in at $90 per share for an upside potential of over 31%. Down below, you'll see a lot of 5-star analysts weighing in on the stock. On the low end, we do have our hold rating here from Morgan Stanley with an upside of just over 3%. A lot of the rest in those double digits between 20, 30, 40% upside. And on the high end, we have an upside price target with 45%. And our second chip stock picking up ratings from some top-ranked analysts is Broadcom. They trade under the ticker AVGO and are currently priced at $1,260 per share. Their stock has seen some big growth over the past year, up over 104%, though they're fairly flat in the past month and have been cooling off the past week, down over 8%. Broadcom is a global technology leader that develops, designs, and supplies a wide range of semiconductor and software products. Their category-leading product portfolio serves critical markets including cloud, data center, networking, broadband, wireless, storage, and more. Their solutions include service provider and enterprise networking and storage, mobile device, and broadband connectivity. With roots dating back to the rich technical heritage of AT&T, Lucent, and Hewlett-Packard, the company is a global leader in numerous product segments serving the world's most successful companies. The Broadcom stock is in the red this past week following their Q1 earnings report, and once again they did come out with better than expected results. However, even with this earnings and revenue beat, the company decided not to raise their full-year revenue guidance, and this left some people disappointed. For their Q1, Broadcom reported earnings per share of $10.99, coming in over 60 cents ahead of the analysts' expectations. They reported revenue of $11.961 million, and that was up 34% from the prior year. But they did just reiterate their full-year annual revenue guidance of about $50 billion. Also in the Q1, they did repurchase over 7.7 million shares worth about $8.2 billion. Their CEO noted that they have two strong drivers of revenue growth in their first quarter and for the year, first being their acquisition of VMware, and second being their strong demand for their networking products in AI data centers. With the Broadcom stock, we saw 4 out of our top 10 analysts recently reiterate ratings. At UBS, they reiterated a buy with an upside of nearly 27%. Our Susquehanna analysts also coming in a buy with an upside of 30% on the stock. Oppenheimer, an upside of over 18%. And Matt Ramsey actually came in with a hold on the stock with an upside of 10%. With 21 current analyst ratings altogether, the Broadcom stock does come in as a strong buy. With 17 buy ratings and 4 holds, the average price target is $1,552. That would be an upside potential of about 23.5%. Down below, once again, a lot of 5-star analysts weighing in. On the low end, we do have our hold rating here from TD Cowen with an upside of about 11% currently and a high-end price target with an upside of 35%. So that is a quick look at 2 semiconductor stocks that are picking up attention from top Wall Street analysts. Let me know your thoughts on these 2 companies in the comments down below, and what other chip stocks have you excited? I know there's a lot out there right now. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are up to, so please make sure you always do your own research and due diligence. Thanks so much for watching. I hope you have a great day, and I'll see you back here next time.